My name is Rachel Goldman. I'm the CEO of Paramount Gold Nevada. We trade under the symbol PZG on the New York Stock Exchange American, and we're a US-based company with US-only assets. For a little bit of history, Paramount Gold is actually the second Paramount. It was created in 2015 when Corp Mining acquired the first Paramount Gold and Silver. Paramount Gold Nevada was spun out with the sleeper asset. Subsequently, in 2016, we acquired Calico Resources for the Grassy Mountain project in Oregon, which at the time we acquired for a mere $15 per ounce. So where we sit today is with in excess of 4 million ounces, as I mentioned, all based in the US. We have just 40 million shares outstanding on a fully diluted basis and approximately a $40 million market cap. We've pursued a disciplined and measured approach of low risk acquisitions and development. So you will not see us trending all over the world looking for whatever happens to be the most popular flavor of the day. So what Grassy Mountain is, it will be the first mine built in Oregon. It's located in Eastern Oregon, which those of you who are familiar with the beautiful coastal west coast of Oregon, couldn't be any further from that place, both in terms of the geography and the population makeup. Eastern Oregon has a very high rate of unemployment, high poverty rate, and it's part of the reason that we've generated such strong local support to see this first mine ever get built. This is going to be a very small footprint, quick payback, high grade underground mine. In fact, we recently released a feasibility study which outlined an 8-year mine life. We'll be mining at 6.46 grams per ton for all-in sustaining costs of less than $700 an ounce, which is probably lowest decile at this juncture. It will cost us just under $100 million in CapEx for a $105 million after-tax NPV. This will have a very quick 3-year payback, a 26% IRR, and this is using a base case gold price of $1,470 per ounce. If we were to look at something closer to today's prices, at $1,900 gold, this project will have an after-tax NPV of $195 million and a 40% IRR. So really underscoring how this is a mine that definitely should be built. Once Grassy Mountain is in production, at these base case commodity prices, it will be generating an average annual after-tax free cash flow of $35 million. And this compares to our current market cap of about $40 million. Beyond that, we do have optionality to further increase the grade profile through nearby exploration, both close to mine, and also we have a property that we've optioned just 12 miles away, which has historic showings materially higher than Grassy, called Frost. This project will be very excited to get in and drill in the not too distant future. In addition to the Grassy Mountain project, we also own the historic Sleeper project in Nevada. This was a past producing mine, which at this juncture, we have in excess of 3 million ounces in the resource category. It's quite a bit lower grade at 0.33 grams per ton. However, we have a huge 40,000 acre land position, which is largely underexplored. In 2015, there was a PEA that was done on this project, which at the time showed a post-tax NPV of $233 million at a $1,500 gold price. Now with Grassy moving towards development and through the permitting process, we have both the management time and the balance sheet to start focusing some renewed attention to Sleeper and look at different development opportunities moving forward. So as of today, Paramount stock trades at less than $10 per ounce in the ground at 0.36 times consensus NAV the last time I checked. We've been very conservative with our share issuance, and that's why we have just over 40 million shares outstanding right now, with insiders and strategic shareholders controlling about 30% of those shares. And we're well funded to continue our ongoing development efforts to de-risk our assets. Investors have a number of options available to them when they look at buying a gold stock today. And what I think stands out with Paramount is both that the stock is incredibly cheap, has very strong support from insiders and strategic shareholders within the company, and has multiple development and de-risking opportunities ahead of it to see the share price accrete anywhere close to what the peer is trading at right now. For an investor in Paramount today, there are a number of upcoming catalysts to be aware of. Now that we've gotten the feasibility study on Grassy Mountain behind us, we will look to submit the next phases of our permitting applications at both the state and the federal levels in the first half of 2021. Earlier in the first half of 2021, we are also very excited to gain access to drill the Frost property, which is located just 12 miles from Grassy Mountain. This will be the first time that Frost has seen any drilling done on it since the 1980s, when it was owned by Western Mining. And at the time, they'd encountered intercepts of up to 20 grams per ton. So although Grassy is already high grade, I'm sure you can imagine that if we have the ability to truck anywhere close to 20 gram per ton material to the plant, we're going to significantly improve the already robust grade profile and the payback period. In addition to that, we will also be putting out in the near term first phase of a development plan for the Sleeper property in Nevada, which will outline the steps that we're going to take to look towards a future development and weighing out the different options that we can look at, whether it is to update a PEA or perhaps move to a PFS, along with likely metallurgical work and some additional resource modeling. With that, I want to thank you very much for your time.